Hi guys. So I'm going to talk about, we were talking about edge earlier, and yesterday we were talking a lot about psychology, and that there's sort of two elements to consistent trading, one being the trading edge itself and the second being the psychology. Spoke a lot about psychology yesterday, so I'm going to talk just for 10 minutes about trading with an edge versus random trading. I'm also going to we're going to start off with some of my howlers from a couple of years ago, just to demonstrate what trading without an edge looks like. Got this one here. This is a stock called UVXY, which basically tracks the VIX, but it's triple leveraged. And you can see here this mush, where you're going long, short, long, short, long, short, long, sort of a profitable trade there. But absolute carnage, especially after commissions. There's no strategy there at all. It's all random trades. Let me show you another one. I'll save the best till last, okay? Oh, it gets worse than this. And again, this is it on a 60-minute view. You know if you're trading too much, because on a 60-minute chart, it gets really looks like machine gun fire, you see like long, short, long, short, long, short. What other ones have we got? And again here, long, short, long, short, long, short. That's an emotional trading thing. You've taken the first loss, it's sort of peed you off a bit. Then you've taken the second loss, and now you're just sort of, there's no need to keep trading it. But now you're trading off of those emotions, not trading a strategy anymore. I've got a couple of others here. These ones start to get bad now. I mean, this is disgraceful. Long, short, long, short, long, short, literally for hours, from like 9 in the morning till 11. This sort of stuff up here, there's way too much going on there. And what that says to me is that there's no edge there at all. An edge is sort of like your trading plan. If I was a pullback trader, I'd be looking to trade a trend pullback, in which case an entry might have been down here, or an entry might have been down here. Or if I was a breakout trader, I would just be looking to trade breakouts, nothing else. It's like Sam was saying earlier, all the trades, if you're trading an edge, all the trades should look pretty much the same. That's where the consistency comes from. Here again, this whatever stock this was, absolute carnage. There's way too much going on here. Long, short, long, short, long, short, long, short. And as the day goes on, anger builds, frustration builds. You just lose control of what's going on. And yeah, pretty bad. Right, I told you I saved the best one till last. So here's the finale. Believe this was Weight Watchers. Look at that. I challenge anyone to beat that. No, don't try. But that is just utter carnage, and that that is emotional trading 101. No strategy there. Started off quite well with the pullback trade there. You got the move up higher. I guess the plan was to trade the pullback. We got in, got straight out of fear, and then got back in again when it started to go in my favour, and then out, and then back in, then out, and then back in, and then probably short somewhere, and then it just went downhill from there. And I mean, if anyone can relate to that, there is a way to train yourself to start. I obviously don't behave like this anymore, and yeah, the muscle in my right arm is bigger, not for the reason that you would expect. It's because of this. Now, struggled with emotions a lot, and there is a way to train yourself to stop doing that and to execute edge correctly. And so the first edge that I had that was a successful trade, I had to train myself. An edge is a set of variables, or a set of filters, if you like, that defines the. Scrap that. An edge is a set of variables in the market that tilt odds in your favour. So Mark Douglas, Trading in the Zone, if anyone's not read that, a lot of what I'm about to say comes from that book. Is, for example, a breakout strategy may have a 60% win rate and 3-to-1 risk to reward. And that doesn't mean to say that this trade that I'm in right now is going to be a winner. What it does mean is that over the next 20 trades, overall, it should add up to a profit. It's, I always go back to the roulette and the casino example, which was how does the roulette work? How does a casino consistently make money off of roulette? Well, it's because you would have thought there's 36 numbers on the roulette, red and black. So if you bet red and black odd even, you've got 50-50 chance of winning. So over 100 bets should win 50-50. But the casino throw the 0 and the 00 green numbers in there. So that reduces your odds to 46%, the casino to 54%. Now there's only a 6% edge there. It's only 6%. It's not a lot. And on the individual bet, it really makes no difference. But over 1,000 bets, over 10,000 bets, that edge is really going to start to play out in the casino's favour. And so with a trading edge, that's what we're doing, is we're looking over 100 bets, over 1,000 bets, is to get odds in our favour. And the margins can be quite tight. So I'll share with you the first edge where I achieved a steadily rising equity curve, which was what I called the Asia range break, or opening range break. So, and it still works today. I'll get a box out here, and the strategy, so the edge, if somebody asked me what's your edge, I was able to say I was looking at the range over the Asia trading session on specifically the euro, no other currencies, and I was looking to trade a breakout of that level, either higher or lower, and scale out accordingly for 2-to-1, 3-to-1. So it's really, really dead simple, and I needed dead simple, as you saw from that Weight Watchers example. There we go. So look in here, there's your Asia range. There's your sort of Asia range. Sort of breaks to the downside, doesn't work, but then it breaks to the upside and it works. That was it. One trade. And then for the rest of the day I wouldn't do anything. It was that one trade. And then I'd wait until the next day. Doesn't work on this day. But we sort of drop out of the gate. This is a day where it didn't work. And then I would leave it at that. So I'd have one win, one loss, overall net profit, because of the risk to reward was skewed 2-to-1, 3-to-1. Doesn't work on that day either. But on this day, it kind of does work. You get the break. I would take the first off, maybe go break even, and then I don't think part of the strategy was to re-enter it, so you get break even day there. And then on this day you can see the Asia range here that sort of breaks to the upside, might have got stopped out, but if that, that might have been a winner, and then that would be another one to the thing, and I wouldn't trade for the rest of the day. So I was literally, very slowly, I was training myself just to execute that one trade, just that edge. I wasn't trying to be right, I wasn't trying to make money, I wasn't, I was just trading the edge when I saw it. On this day here, you've got the Asia range here, and when it breaks to the downside, you get a bit of a classic off of that area and it sells off. So that was a winning day. And this chart's 2 hours ahead of time, so that would have been 6 in the morning there. So the Asia range would have been that. Breaks to the top side, get a trade to the upside. Actually, it ends up coming all the way back and breaking to the downside. So you got 2 winners on that day. No more trades, and doing this short example, Mark Douglas talks about using a mechanical trading system if you struggle with emotions and that, to train yourself just to trade the edge, I mean, in this example, you've got the Asia range, it breaks to the upside, you might have got 2 off and then it comes back. And it was just an exercise. And you can do that same exercise with like moving averages or something. It's just training yourself over the course of a month. I've got this 100-day moving average, and I'm just going to trade bounces off of it, win or lose, and I'm going to execute no other trade. That's my edge. I mean, that's a very simple edge, and it may or may not work, but really the exercise is just training yourself to have an edge, back test it if you like, or if it's a news-driven one, or whatever the edge is, and just stick to that edge here. And I've got some examples of when that started to work for me. So the line here would have been your Asia range low. We get a break below, you get the classic off of the area, and that was the trade scaling out. We've got, and you can already see, and you've got this one as well. You've got the Asia range top, the break above, come back for the classic, go along, scaling out. You know, so there's a ton of difference in between trades like that and trades like that. You know, so really the exercise is just training yourself to execute the edge, and then for the rest of the day, finished. You know, which is also a really, really crucial part of trading the edge, is not trading anything else that's not the edge. You know, and if you screw the edge up, you have to just come back tomorrow. You know, and honestly, it can be done. You can train yourself, sort of like a dog. I used to think of myself as like that dog, where you train the dog to go to the toilet outside, not inside the house, you know. And over time, you start to develop that. And then I started to move on to more strategies where I was sort of, once I developed those skills in just trading the edge and nothing else, I was able to sort of build on the edge and develop sort of newer, more powerful edges, like the sort of swing ones that I'm trading at the moment. But like, I think it's nice to sort of see that, like, if you are struggling with those emotions, you're not the only person that has, and you know, it can be done. You can train yourself to do it. And I think that I'll also add that trading an edge, like this simple opening range breakout strategy, is flipping a coin, but the coin is weighted. If I was to start trading this opening range breakout strategy along with trend pullbacks, trend breakouts, fib pullbacks, mean reversion, if I was to, then I'm effectively flipping multiple coins at the same time, right? Believing that more is better. But if I'm flipping multiple coins, the opening range breakout might work, and then the trend pullback doesn't, and then the following day trend pullback works, and then opening range breakout doesn't. So you end up flat all the time. If you start trading multiple strategies at the same time, I think the net result really is just ending up flat all the time, or actually throwing your toys out of the pram when that's happened 4 or 5 days in a row. You're like, and then all of a sudden you start to end up, the Weight Watchers example, where you just lose your cool, and now you're just trading, and you just destroy the account. And so that, you know, Mark Douglas spoke a lot about when you've defined your edge and understand how the edge works from the casino analogy, then all it becomes is an execution thing, which is consistency and approach. You know, as well, we're not trading the market, we're trading the edge. And then beneath that, we're not really trading the edge, we're trading ourselves. Mark Douglas described the market as a mirror, and it will reflect back at you the way that you feel in that moment, you know. And if you start to go off course, the trading is going to do exactly that, you know. And so there's not really too much else to talk about. That is the definition of edge. And if you want a more sort of in-depth view on that, I would suggest reading Trading in the Zone by Mark Douglas, and tailoring your edge to your own personality. Trading intraday makes me panic, and when I panic I lose control, so I start to trade swing, or I just trade once a day or twice a day, you know. So learning your character, learning your personality, and then tailoring your edge to that. Finish on this is that, you know, if you're executing the edge correctly, all the trades should look pretty much the same, you know. Trading randomly is when you get that sort of, you know, long short trading randomly, but all the trades should pretty much look the same. That's consistency, and ultimately consistency is the key to consistent profits. If anyone has any questions, reach out in the chat, and otherwise I'll leave it there. Thanks, guys.